This podcast is not legal advice and should not be relied upon as such. You should always obtain legal advice about your specific circumstances.
Hello and welcome to Tax Records, the Hall and Wilcox tax team's podcast series. My name is Frank Inopoulos and I'm a partner in the tax team at Hall and Wilcox. Today, I'm delighted to be joined by my colleague, Adam Dimack, who is a senior associate in our tax team and an expert on all things cryptocurrency and NFT. And that's what we're going to be delving into today. There's obviously lots of hype around cryptocurrencies, and we hear about them all the time. But there are also a number of important tax implications for people who hold or invest in cryptocurrencies. And it's very important that we are aware of all of these. So, Adam, welcome to Smarter Lawcast.
Thanks, Frank, and thank you for the kind introduction. I think there are probably truly some experts out there who might take some exception to that intro, but we'll just go with it.
Okay. Now, my first question, Adam, is I will ask you to pretend I was an 8-year-old and tell me what cryptocurrencies and NFTs are.
Yep. Well, I mean, look, that's obviously a good place to start. And it's a good question to start with. But funnily enough, probably one of the few questions that I might not be able to do full justice because I'm a tax lawyer, not a blockchain expert. But I'll give it a crack. So for cryptocurrency, you have a strict definition, which is something like a digital currency where encryption techniques are used to regulate the generation of units of the currency and to verify the transfer of funds. And all of this operates independently of a bank. And it's all done through the use of a concept known as public key cryptography, which is basically where you have a private key that you keep secret like a password, and then a public key that you share with the world. And I think you and I, and probably most people who have invested in and been involved in cryptocurrency would have experienced practically how these public and private keys work. I mean, if you've moved cryptocurrency from one exchange to another, you would have had to have used that public key. So that's sort of a bit more of a technical explanation, but there's also sort of a layman or lawyer or accountant explanation that I like to use sometimes. And I just like to imagine a blockchain that underlies any sort of cryptocurrency as a big spreadsheet, which records all of the transactions that happen and verifies those transactions. But rather than that spreadsheet being kept by a bank, so rather than it being centralized, it's decentralized, and the public can basically participate in that verification process for a reward like mining or staking.
Mm-hmm. Excellent. Well, thank you, Adam. I now know more than I did 2 minutes ago, most certainly. So thank you for that lucid explanation. And tell us a little bit about why we're hearing so much about cryptocurrencies and NFTs and what all of this hype is about.
Yeah, well, I mean, the explanation I just gave was about cryptocurrencies. We have obviously more recently this new concept and new technology known as a non-fungible token or an NFT. They're a little bit different. They exist on a blockchain, mainly Ethereum, but there are some others like Solana and a few others. And these things are basically like a unit of data stored on that digital ledger. So they're unique, they're interchangeable, they're not interchangeable, they're unique. And they're generally used to represent ownership in a tangible or intangible asset. So something stored outside of, that might not even be stored on a digital ledger, like something physical, like digital artwork, digital representation of an object or event. So that's what an NFT is. And I think NFTs and a few other recent developments in both the technology and community that underlies blockchain and digital assets are the reason that we're seeing all the hype. I mean, we've got other things that have happened, for example, institutional interest and investment. I think you might have heard, I don't know, did you hear this week, for example, that CBA, the first of the big four banks, is now offering cryptocurrency trading?
Yeah.
Which, I think that's massive, right? That's that's something that is now going to make cryptocurrency trading more accessible to everyone and anyone who basically knows how to use a CommSec account, I imagine.
Mm-hmm.
And then we've got these other sort of technologies and developments, and one of the big ones is decentralized finance, or DeFi, DE-FI, as it's usually referred to. And this is sort of an umbrella term for blockchain-based forms of finance. And a basic example is that you can basically lend capital in the form of a cryptocurrency on an online platform, and you get a return, just like lending to a bank. But the difference is that the returns that some people have been seeing, far exceed what are sort of historically low interest rates. So, you've got this development in technology, you've got this development within the community, and you've got institutional interest and investment, and all of those things are sort of contributing to the hype that we're seeing now, and the massive rise in prices and the all-time highs in the prices, I think.
Great. I have heard the abbreviation DeFi before, Adam, and it's always sort of reminded me of an 80s pop band. But no, there's certainly a lot of hype, and there's probably as many people who think that cryptocurrencies are going to disappear one day as there are people who think that it's going to be the great revolution of the internet. So I'm very excited to see how it all goes and how it all travels, and probably hasn't been a bad thing that along the way people who have speculated on cryptocurrencies have made tons of money and seemingly are not afraid to be showing off about it. But no, it's a very exciting area, and I think for somebody like you to be focusing on it, we're very lucky to have your knowledge and your resources. So let's go to a couple of technical aspects now. And you described the cryptocurrencies as effectively a digital currency, not issued by a bank or a reserve bank, but issued basically in a digital form and verified by the blockchain. Now, so we're very used to in tax, dealing with government issued currencies, Australian dollars, US dollars, British pounds, etc. So are cryptocurrencies currencies for tax purposes, and do we treat them the same way that we might treat currencies for tax purposes in terms of changes in rate and so on?
Yeah, this is a good question, because if once you get into the discussion about cryptocurrencies and NFTs and tax, this is probably the first question that you have to ask yourself, which is, are cryptocurrencies or NFTs currencies for tax purposes? I think it's easy to deal with NFTs first, because I think the answer is clearly no. They're not thought of by the general public and the community as currencies. They're not treated as currencies. They're not the same really as other cryptocurrencies. So I think pretty simple answer there is no, and I'm not aware of anyone who would have a different view about that. There might be someone out there, but I don't know that person. I think it's obviously a bit more of a nuanced question for cryptocurrencies and Bitcoin in particular. And since 2014, the Commissioner of Taxation has had a view that cryptocurrencies, and in particular Bitcoin, aren't currency or foreign currency for tax purposes. And there are sort of three reasons why the Commissioner took this view back in 2014 and still holds this view, as far as we're aware. And the three reasons are: one, the current level of use of Bitcoin was far short of what might be regarded as sufficient or necessary to satisfy some tests which we see set out in case law. The second reason was that it wasn't a generally accepted medium of exchange. Again, it wasn't able to meet those sort of tests in the relevant case law. And the third reason was sort of this nuanced legislative reason, which was that it's not a foreign currency because the legislative context in which the term currency is used is to define foreign currency as something other than Australian currency. So basically the Commission was saying, well, cryptocurrencies aren't the currency of another nation, so they're not Australian currencies. And, we can test this pretty easily. It's undeniable that Bitcoin and other cryptocurrencies are growing in popularity and in acceptance, but I mean, think about it. If you walk down to your local shop, how many of them do you think would accept Bitcoin for payment?
Well, I could have a couple who might be attracted to the idea, but no, I take your point. And I did see in the press, actually, Adam, that interestingly, El Salvador has started to accept Bitcoin as legal tender. So, I mean, can you tell me? I mean, what does that mean? Does that mean in El Salvador you can walk into a 7-Eleven and buy a carton of milk with Bitcoin? And does that change anything around what you were saying about the ATO's view on cryptocurrencies not being currencies because they're not a generally accepted means of exchange?
Yeah, I'm not sure exactly how it works within El Salvador. I mean, it has now adopted Bitcoin as legal tender, but I think it still has its normal fiat currency as well. And I think there have been a number of institutions and businesses which have adopted and began to use Bitcoin as legal tender. So it's certainly the case that they've adopted that change. From an Australian point of view, I'm not sure that it really changes anything. I did hear the same news that you did about El Salvador accepting Bitcoin as legal tender, and when I heard that, I wanted to see what the commissioner might have said about that back in 2014 when he put out his tax determination. And that tax determination, just to go back a bit, that's where he sort of sets out those views that I discussed earlier about why Bitcoin isn't a currency or foreign currency. And so I went back and looked at this determination, and I was actually right. There's a compendium to it, which usually people don't look at. But that compendium will often contain questions that are put to the commissioner by the public, or challenges, I guess, to his position. And someone within that compendium asked the question of, well, should the commissioner adopt a different view now on the basis that Bitcoin might one day become legal tender? And the commissioner had quite a good response, which is, well, basically said anything can at some point become legal tender, and it doesn't warrant me changing my view now. So I thought that was a pretty good response. The other thing I think that I think if you look at the relevant case law, and there was a case in 2020, Cerebu, which was a case where the commissioner's position on this issue was tested. I think what you'll find is that it's just because El Salvador is accepting Bitcoin as legal tender, it doesn't necessarily mean it changes the Australian position, because Bitcoin is still not a currency that's issued by El Salvador. And I think that's the key difference. It might accept it as legal tender, but it's not necessarily issuing that currency. And so that's why I'm not too sure that it changes things from, an Australian point of view.
No, that's really interesting, Adam. And I could never thought that they would come when I would be considering the El Salvador monetary system and the definition of currency in such depth as a tax lawyer. But now let's talk about some practical tax issues. I mean, if I'm somebody who has bought some Bitcoin or bought some Ethereum or bought another Dogecoin or something else, just as a punt, hoping that I'd make some money, and maybe I do or maybe I don't. But how do we deal with these things practically from a tax point of view? I mean, are they CGT assets? I mean, do you hold them on revenue account? Are they nothing? Do they fall between the cracks? Sort of take us through, please, some of those issues. Yeah,
I think it's better actually to start with sort of these practical issues rather than the technical tax issues. I mean, the simple answer to one of your questions is that yes, most cryptocurrencies and NFTs will be regarded as CGT assets. But then when you sort of get into the nitty gritty of, how they might be taxed on revenue account or capital account, whether the 50% discount will apply, whether they're, personal use assets, collectibles, that sort of thing. I think we have to remember one important thing when we're thinking about answering those questions. And that is that we have no new income tax laws that have been implemented specifically for cryptocurrency or NFTs. So what we're really doing when we're looking to give our clients, or looking for our own answers to our tax questions, is we have to apply the traditional tax rules to what is basically a new and, in some regards, a very nuanced asset class. So there's no new rules out there. it's just a new and different asset class. And what that means is that it can become quite difficult sometimes to get these traditional rules to fit well. And you really saw that sort of bear out quite recently. I'm not sure if you saw it, but we had the final report from the Select Committee on Australia as a Technology and Financial Centre. And it was a great report. Obviously, all of the people in the digital asset community had put in a huge effort. And it was quite clear that some of the tax issues which arose because we were, pushing these traditional rules through or into or applying them to this new asset class, they were aired, and there were some recommendations around how to sort of fix that. There are some other sort of more practical tax issues that I think everyone sort of needs to be aware of. Do you mind if I just go through a few of them quickly?
Oh, no, I'd love it if you did.
Yeah. Okay, thanks. Well, I mean, one of them that I sort of talk about and maybe bang on about a bit too much is both within and outside of the digital asset community, there's this sort of perceived lack of transparency. And what I mean by that is, some people, within the community and outside of the community probably more often think that, cryptocurrency transactions are all hidden, and basically you don't have to report them for tax purposes because the commissioner and the ATO are never going to be able to see what's happened.
That doesn't sound like a good idea, Adam.
No. I mean, it's even if that were the case, even if there was no transparency, obviously that's not a good idea. But I think that the basic premise of that idea that there is no transparency is just wrong. A blockchain records every single transaction that ever happens on that blockchain. So, Frank, if I, 5 years ago gave you some Bitcoin, that'll be on the Bitcoin blockchain now. And in 10 years' time, it'll be on there. And 10 years after that, it'll be on there. And the idea is that it'll be there forever. And so, the blockchain's not going to record my name and your name. It's not going to say Adam gave Frank some cryptocurrency, but it'll have that public key address. And the issue there is that public key address can be linked to someone's identity relatively easily. For example, if you trade using a Australian exchange, that Australian exchange is subject to the Commissioner's information gathering power. We know the ATO is running data matching protocols. And so very easily that wallet address can be linked to you. And all of a sudden the ATO can see everything that you've been up to.
Yeah, well, a little bit like what we were talking about in one of our other podcasts, Adam, about the Pandora Papers and cross-border fund transfers. Taxpayers should really almost start with the assumption that these things will be identified and will be scrutinised and prepare to make sure that they're compliant and prepare to answer any questions that they may have about them. And just to wrap up, I mean, this is such an emerging and new area, and the issues are so new and largely untested. Can you just tell us a bit about the actual work that you've done in this area as a senior associate in our tax team? What sort of issues have you done, and what sort of experience do you have in this area for clients?
Yeah, I mean, first it started out really back in late 2017 or maybe mid 2017 with people coming forward who had, from a personal point of view, made massive gains on their cryptocurrency trading. So, people who had been early adopters, who had bought, various cryptocurrencies at a very, very low price and who now had made millions and millions of dollars. And at the beginning, it was just really sort of trying to give these people tax advice about the basics. Is cryptocurrency a CGT asset? If it is, what does that mean in terms of your tax? Were you holding that cryptocurrency on capital account? Had you, tipped over and started to trade on revenue account, or, to carry on a profit-making undertaking or plan? So that was sort of the beginning. That's how it all started. And then from that, we had, again, probably 2017, 2018, we had the great ICO boom. So everyone was wanting to do an ICO, but very few people truly understood the potential tax implications. So we advised a number of different potential, I guess you'd call them ICO programs or ICO, ideas. More recently, what we've been seeing is that people now have a pretty good grasp in terms of how the basic rules apply to most taxpayers. So, everyday people who are trading. But what we're seeing now is, particularly with non-fungible tokens and decentralized finance, there are some new nuances arising. So the one of the issues, for example, with decentralized finance is, if you just take the basic premise of lending money, for example, to a bank and receiving interest, I think it's probably well accepted that the interest will be assessable income and that there's no capital gain when you sort of put your money in and get it back. But because it's a little bit different, because most cryptocurrencies are CGT assets, it all of a sudden raises the question of whether, when you're entering into or carrying out one of these decentralized DeFi protocols, when you're staking or putting forward your cryptocurrency, what happens to it? Is there a disposal? Is this platform simply holding your cryptocurrency in a custodian capacity? And if there is, a disposal, what does that mean for you? It's not really then the same as just lending to a bank, because you all of a sudden have another extra tax issue to think about. And, depending on timings and whether that spans across income years, you might have some unusual and potentially unfair tax outcomes.
Excellent. Wow. And let me just say, I'm so impressed and proud of how you and others around Hall & Wilcox have really embraced this area and made a good tangible practice out of it. And very well done today, Adam. Don't think even Elon Musk would have done a better job explaining and demystifying cryptocurrencies and NFTs and going through the tax issues. So I really appreciate you taking the time to chat with us today, Adam. Thanks very much.
Thanks, Frank. My pleasure.
Excellent. Now, we hope that you've enjoyed today's episode looking at cryptocurrencies and NFTs. This is the final episode for now in the series of Tax Records, which is our tax podcast series. Please, however, do get in touch with any of us in the tax team if you have any issues that we've discussed on these podcasts that you would like to talk through a little more. As always, you can find our contact details on the Hall & Wilcox website, hallandwilcox.com.au, or please connect with us on LinkedIn. Thanks very much.